My name is Nikhil. I'm one of the co-founders of Setu. At Setu, our mission is to make formal financial services affordable and accessible to everybody in India. The name Setu actually in Sanskrit means bridge. And our big inspiration was if we look at open APIs or APIs, they're essentially nothing but software bridges that connect two different applications. And that's how the name Setu came about. So we are essentially an API infrastructure company. What this means is if any developer or any institution wants to digitize a part of their financial services, whether it could be on payments, whether it could be in KYC, or whether it's underwriting, we provide API infrastructure which is built on top of the digital public infrastructure that's available in India. The major goal of digital public infrastructure in a country like India is to broadly, we can classify it into two large buckets. One is to bring down the costs of transactions. This could be through payments infrastructure, this could be through KYC infrastructure, and so on and so forth. And then the second is to also bring down the cost of onboarding a customer, which means accessing different data, making sure underwriting happens, and so on. So in India, when we think about making formal financial services affordable and accessible to everybody, one of the major important levers for us to think about in this century at this point in time is how do we use digital, how do we use the internet, how do we use technology to bridge the gap that exists between what people want and what institutions are able to serve. So essentially DPI brings down the cost of delivering these digital financial services. Now when the cost of delivering these services come down, what this means is now you will be able to serve a large set of customers who you were not able to serve before. For example, let's say today if you go to a bank and if you apply for a loan at a branch, the cost of processing that loan is anywhere around 5,000 rupees or broadly say $80, right? So if this cost needs to go, if we need to basically enable, let's say, a small merchant who is selling snacks or coffee or tea, nearby your home or wherever, that person might just need the loan amount itself could be just $80 or $100. So you can't be spending $80 to $100 as a cost of processing to give a $80 to $100 loan, right? This economics never works. So the only way you can think about serving that particular customer base is by reducing your cost of processing. And the cost of processing can be significantly reduced by using digital public infrastructure. What does this mean? For example, the cost that would take for us to process an application offline at a branch, which could be anywhere between $80 to $100, can be brought down to $1 by using digital public infrastructure. So when your cost becomes $1 to process and apply application of a loan, you can now think about building sachet size products, which could be for $100 loans, it could be even $50 loans, it could be small insurances that people would want to buy on a daily basis, do savings. All of that is now possible. Which is why digital public infrastructure is very, very important in a developing market like India. It brings down the cost of servicing customers, and when that happens, you will now be able to service a large set of customers, and that's what our mission is. Let me take one example of a very good implementation of a DPI, which is not so well known. So in India, we have a bill payment system which is interoperable, open and accessible to everybody called the Bharat Bill Payment System. When it originally was designed, it was thought about enabling digitization of bill payments, which could be for utility payments like electricity, water, broadband, gas, etc., etc. What this meant is any consumer who is consuming these services from the government or even from a private agency need not go to the office of this particular service provider to pay their bills on a monthly basis, but they could sit at home, use one of their favorite payment applications and complete a payment. But if you really look at the impact that it's having, how it's evolved, is BBPS, the Bharat Bill Payment System, also allows lenders or banks which are lending to customers to become a merchant or a biller on the system. So what this means is a consumer is now able to sit at home and also repay their loan without actually an agent needing to visit them, without actually a phone call and so on. So what this has done is, for a lot of microfinance institutions, for a lot of NBFCs, for a lot of banks which serve in rural areas and underserved areas, it's brought down the cost of collections, because just the mere act of sending somebody to your doorstep to collect cash and take that cash and go put it into, let's say, a nearest branch, and then converting that into digital to, if you look at the supply chain of the money, it's very expensive to do this. However, in digital, the fact that the customer is sitting at home, making a payment 2 clicks, and the money reaches much faster, it's more efficient, it's super low cost. This has basically brought down the cost of collections for a lender. Now, when you bring down the cost of collections for a lender, if you look at any lending industry, any lending customer, one of the major expenses that they have, when they lend to customers, is the cost of collections. So when you are able to reduce the cost of collections, you are reducing the cost of operations of a lender. And as a result of that, if the cost of operations come down, this means that the end borrower can actually get the loan at a lower cost. Right? So this is how DPI is impacting at various different levels. So we might see the first order effect, that it's low cost collection, but the longer term second order effect of this is that because the cost of collections has come down, the cost of operations come down, and as a result of that, the cost of borrowing comes down for the end borrower. Right? So this is a good example of how DPI is being used in the digital financial services space. Generally, when fintechs and payment infrastructure or infrastructure companies have been built, you can think about companies being built on, or companies building closed loop systems where you control the demand and the supply side, and then you build value added services, products, etc. Now, one of the big problems of this is you're always limited to the supply and demand that you can build. And it has its pros and cons. It has pros because it has bigger margins, but it has cons because you don't have a large base, so you won't have large impact and so on. And then the other approach is to adapt to open loop technologies and then build on top of it. So when we were starting, we were very clear that rather than fighting DPI or open loop, we will completely embrace it and become an innovation layer on top of it, because we genuinely believe over the long term, consumers would love choice. Interoperability will be more important, and consumers seek this. And it's also very good for the businesses which are interacting with these DPIs, because at the end of the day, they get cost benefits, etc., etc. So our major decision fork in our process of building our company and the startup was, do we try and go the closed loop route, or do we completely embrace open loop? And we chose the latter. And that was probably one of the major, design decisions that we had to take when we started the company. So the good news about working on open loop is that it's just not you. It's actually being a part of the ecosystem. To me, DPI in India has become more like a movement, which has various different people, right from banks who've been there for a long time, to to new innovators like fintechs which have come up, to regulators, the government, and everybody basically playing a role in coming together to make each of these DPI work. And as a result of that, as they say, a rising tide takes everybody along. It's been one such journey for us, right? So as far as the ecosystem is winning, we will continue to win. And we've seen tremendous progress we've made across payments, KYC, and data infrastructure, building on top of the digital public infra available in India. There are generally a lot of challenges when a DPI comes to life, especially in a country like India where you have so many different stakeholders, various different people participating in it. The challenges start from, what should be the standard operating procedures, how do we ensure data security, pricing and commercials, uptimes and SLAs and so on. Because one of the things we need to understand about DPI is, you kind of give away some part of the process or control to other systems which are not under your control. And this is really hard to do for many institutions because generally our mental model is the more you're in control, the more efficient it is, the better the results are. It takes some time for people to move from that to see benefits. But because DPI has this beautiful innate virtue of creating network effects, it always trumps over what an individual can do. Like they say, the sum of parts is always more powerful than the part itself, and it's one such thing. And generally, I think because of the experience of working and building and adapting multiple DPIs, we've now created a kind of a playbook of what it takes for it to come to life. What kind of institutions are required to solve problems, what kind of governance frameworks are required, what kind of regulatory and legal framework is required to make it work. So that way, I think, as you start implementing and start using DPI, you end up building some sort of a mental model and framework to solve these problems. Most of these problems are solved generally by keeping the individual's interest, but rather thinking about the collective benefit all of us would get. This is little hard to do, especially when companies are chasing profits. But I think if we are all, if we are committed to this problem, if we all put our heads together, because the opportunity is so large, the problems are so large, the impact is so large, that no one institution or one individual can solve this. It takes the collective to come together. And I think that's worked out very well for us in the India context. I do think that DPI is a level playing field. I would like to make a counter argument or this thing that typically our mental model says that, okay, you have incumbents and then you have, innovators, and the innovators come and eat incumbents breakfast or lunch. But I actually think it also holds true in the other way around. If you're actually empathetic to incumbents, so let's take a bank for example, which has been around for, let's say, 50 years or 100 years and have been doing things the same way. My parents were bankers, so I'm very empathetic to what happens in some of these bank boardrooms and stuff, where there is so much shift of technology and internet and everything that's happening around us in the world. It is really hard for a large organization to actually react to this. And one of the reasons why innovators win is because their reaction time is very less, right? It's not like anyone's born with some special superpowers and so on, but if you really cut down to the brass tacks, it's that the fintechs or any new company is small in nature, so decisions are made faster, your risk-taking appetite is higher, etc., and so on. And that typically gives them an edge. And obviously one of the biggest beneficiaries of DPI is fintechs. They leverage it and so on. But I do think the other side of it is like, because the DPI exists, and as a result of this, there is some sort of a design language that's created, that this is how a customer's onboarding would happen, this is how a customer's bill payment would happen, or this is how a customer's KYC would happen. Now that started resulting in the banks and others also saying, hey, okay, now that the regulator has blessed this, now that the government legal law enables us to do so, let's also follow these principles. And it's cut down their time to actually make these decisions, get on top of it, leverage it, and and challenge the innovators as well. So in some sense, the level playing field kind of goes both ways, where it does provide an opportunity for anybody, irrespective of how big or small they are, to leverage it and use it to its best, so that there's actual positive impact on the people that they're trying to serve. So that's how I would probably put this together. That I don't think one loses or the other wins in this. It does create a level playing field where everyone has equal rights and right to win in this market. UPI is a beautiful example of this ecosystem coming together where banks play a very, very important role as the payment service provider. Banks also play a very, very important role as the custodian of the money of the customers. But they were also the enabler of fintechs, which are built on top of the payment service providers, which could be the examples of Phone Pay, Google Pay, Paytm, WhatsApp, and many others who have innovated on top of this layer. And this has enabled the banks to continue to do what they do best, which is essentially keep the deposits, the trust of their customers, do what they're best at in banking to bring in deposits, lend it to their customers, and so on. But at the same time, enable superior user experiences for their customers on payments by creating this beautiful ecosystem of third-party application providers, different fintechs on merchant solutions, etc. Where this lovely jugalbandi, we use this word called jugalbandi, which is like a loosely used word to something like of a jazz band in India, where everyone's got their instruments and they're all playing in harmony and they're in a flow state. So it's a very good example of everybody coming together and the incumbents actually partnering with fintechs or innovators and shaping disruption. I do think that there's a lot of unnecessary focus spent on people talking about profit pools in the DPI itself. The fact that it's called digital public infrastructure is to say that this fundamental infrastructure is like a public good. By definition, by design, it's meant to help the society at large to solve large problems. Like, for example, in our daily lives, it could be roads, it could be bridges, it could be metro, train tickets, etc. You can't expect it to be super profit making and so on, because these are fundamental utilities that are necessary. And DPI is basically nothing but the digital version of these infrastructure or public goods, right? So I think we need to clearly understand that that's what the role and the definition of that part is. And for everything else, how roads created commerce, right? Because businesses started interacting with each other, right? And because as a result of that, commerce got built. Similarly, you have internet and you have all these platforms on top of it, like Google and Facebook and many other companies or Amazon that got built on top of this. They created tremendous value, right? So I think it's important to understand that DPI is a value creation layer, but not a value capture layer, right? So DPI enables value creation, but it's not the layer in which you capture value. So it's very important to have this mental model that it's an enabling infrastructure, and then your job as an entrepreneur or as a innovator or someone working in a large company is to actually think about how do I best leverage this DPI to build new businesses, new products, new services where I can capture value. For anybody who's thinking of building on top of DPI, there are probably two broad advices that I would give them. One is to embrace DPI and not fight it, because it's one of those fundamentally important things from a principles perspective. I do believe that the principles that DPI stands for will always trump profits and arbitrage, etc., and so on, because the principles of interoperability, being open, being extensible, they are like little bit of physics of sorts, right? Laws of physics. It's so fundamental that it will always trump over. If you're thinking about it from a business law of physics perspective, I think it is always fair to assume that this will trump over whatever that you might think. So my first advice would be to embrace it and not fight it. Whether you're an incumbent or whether you're a newcomer, I think it's important to embrace it. The second advice that I have is, a lot of people might feel that, hey, by building the DPI, you've taken away profit pools. So what do I do now? So like, how do I make money? Like, where do I add value, and so on and so forth. I think it's very important to understand that as time goes by, there are a few technologies, there are a few things which will become bare necessary. Like, for example, at some point in time, water might have been a very, or it's becoming a scarce resource. But then, there's so many applications as a result that it's available. A more recent one that we all experience is the internet, right? So one can argue and say, hey, why don't we pay high prices for internet? It had so much value, etc., etc. But they're all enabling layers, right? So we tend to typically forget the value that gets created on top of this fundamental infrastructure and focus too much on the fundamental infrastructure itself. So my advice to people would be to think about, how do you add value on top of this layer, irrespective of whichever area that you're working on, because DPI needs to be thought about as a building block that's available to you, which makes it easy, which makes it accessible for you to build on top of. But it's not the end of what you need to build. It's the beginning. It's the first brick that you're going to probably lay when you're building your company or your product or service. And then you really need to think about, what are the value added layers that I can do on top of it, which is adding value to my customers, where I can capture value and build a profitable business. So these would be my two things. One is embrace, and second is innovate on value creation on top of the DPI.